Food deliveries are being passed over barriers and under gates to some Shanghai residents who are currently locked down in residential compounds. In a bid to help stem rising COVID-19 infections but prevent a widespread citywide lockdown, the local government is placing restrictions on these compounds where suspected or detected cases have been found. Around the megacity of around 25 million, people have also been queuing for COVID-19 tests after 10 cases were reported on Tuesday. Although case numbers are few by global standards, Shanghai, alongside the rest of the country, is battling its worst flare-up of infections since the virus emerged in Wuhan in 2020. Despite this, residents like Eric Choi are optimistic.
It's hard to describe the current state with one word. On the surface, it looks very tight for everyone. In fact, people are not very nervous. We receive nucleic acid tests, and everything is in an orderly manner.
In the past 10 weeks, China has reported at least 14,000 new local symptomatic cases, more than in all of 2021. The wave is being driven by the Omicron variant and is fueling fears from experts that China's strict zero COVID policy is no longer sustainable, as parts of the country are struggling to contain cases and are scrambling to test populations and quarantine the infected. In the northeastern province of Jilin, which borders North Korea and is the hardest hit region in the current outbreak, affected cities are racing to prepare temporary hospitals. The province's 24 million residents are also banned from leaving without notifying the local police. Although China has a vaccination rate of nearly 90%, experts believe not enough of the elderly have received boosters. It is also unclear how well Chinese vaccines reduce the risk of developing the disease caused by Omicron.
The Federal Reserve on Wednesday raised interest rates by 0.25 percentage point and laid out a plan to push borrowing costs to restrictive levels by next year.
Good afternoon.
Fed Chair Jerome Powell told reporters that concerns over high inflation and the war in Ukraine will have implications on the U.S. economy.
At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Today, in support of these goals, the FOMC raised its policy interest rate by 0.25 percentage point. The economy is very strong, and against the backdrop of an extremely tight labor market and high inflation, the committee anticipates that ongoing increases in the target range for the federal funds rate will be appropriate. In addition, we expect to begin reducing the size of our balance sheet at a coming meeting.
The Fed, in a surprise move, projected the equivalent of 0.25 percentage point rate increases at each of its 6 remaining policy meetings this year.
We'll be looking to see whether the data show expected improvement on inflation. We'll be looking at the inflation outlook and making a judgment. And we'll be going, each meeting is a live meeting, and if we conclude that it would be appropriate to raise interest rates more quickly, then we'll do so.
Powell said the U.S. economy is strong and should flourish even in an environment where borrowing costs are rising and stimulus is being removed.
It's clearly time to raise interest rates and begin the balance sheet shrinkage.
Powell's statement marked an end of the Fed's full-on battle against the pandemic, as it pledged ongoing increases to curb the highest inflation rates in 40 years. But even with the tougher rate increases now projected, the Fed expects inflation to stay above its 2% target, remaining at 4.1% through this year and dropping only to 2.3% through 2024.
At the Newly Juice Company in Lagos, they're feeling the squeeze as the cost of fuel spirals in Nigeria. Inflation has been in the double digits since 2016. But now Russia's invasion of Ukraine has added to volatility in financial markets, sending commodity prices higher and affecting logistics. Chinyere Onya is head of quality, production and procurement at Newly Juice, which also owns a chain of restaurants. She says diesel forms a huge part of their operation expenses, but the cost has tripled in a matter of weeks.
It's gone from 215 to 680, so it's a lot. It's a lot on our side. And then you find also that the national grid power has not been very stable for a very long time. So we're forced to use diesel. And it's not a good time for business.
Inflation rose by 0.1% in February to 15.7%, according to the Statistics Office. Fuel shortages stoked transport and other costs. Meanwhile, the war in Ukraine could drive up the cost of wheat imports in the coming weeks. Wheat was Nigeria's second biggest import during the fourth quarter after petrol, the Statistics Office said. Newly juice regular Hansen Unnadi says he thinks businesses have, so far, been shouldering the cost.
But chances are that if this continues for a longer period of time, the price of food will definitely have to go up. And when that happens, the business might experience less customers. You might end up spending less money and time buying food outside, and everybody loses.
The central bank is scheduled to meet next week to set interest rates and may be under pressure to harden its stance, considering the persistent double-digit inflation.
Shares of Starbucks jumped on Wednesday after the coffee chain announced that its longtime former CEO, Howard Schultz, will return temporarily. It comes as Kevin Johnson, who has been CEO for the last 5 years, said on Wednesday that he will retire from the role on April 4th as a unionization drive at U.S. cafes heats up. Under Johnson's watch, the company put more emphasis on to-go and drive-through orders. Customers also placed more orders through the Starbucks mobile app, which has led to long lines and overworked employees in some areas. That barista burnout contributed to a surge of union organizing at U.S. locations. On Tuesday, a federal labor board accused Starbucks of unlawfully retaliating against employees in Phoenix, Arizona, for trying to unionize their store. Schultz has long said Starbucks did not need unions because it works so closely with employees, and he's already had a run-in with Workers United, the union now representing employees at 6 stores. He has also faced criticism for past remarks on the issue, including likening the company's pro-employee stance to Holocaust prisoners in concentration camps sharing blankets, according to media reports, which sparked a backlash on social media. The board of directors at Starbucks is expected to select a new leader by the fall. U.S. stocks closed at session highs in a volatile day of trading on Wednesday after the Federal Reserve raised interest rates by an expected 0.25 percentage point, but also signaled there'd be more aggressive increases ahead to fight inflation. President of Summit Place Financial Advisors, Liz Miller.
The big news is the expectation that we're now going to see year-end rates around 1.9%. That's huge because we had been expecting before, even as recently as December, just 3 increases this year. With this new expectation of reaching around 1.9% by the end of 2022, that means we're looking at about 6 rate hikes going forward, or we're going to look at higher rate hikes.
Wall Street liked that. The Dow finished up 1.5%, the S&P 500 ended more than 2% higher, while the Nasdaq closed up a whopping 3.75% higher. Big tech led the rally with Apple, Amazon, and Meta platforms all notching big gains. The market also rose on signs of progress in peace talks between Russia and Ukraine, whose president said negotiations were becoming, quote, more realistic. The global mood was also lifted by China's promise to roll out more stimulus and keep markets stable. The country's securities regulator also signaled it would step back from a regulatory crackdown on China's tech giants. That catapulted U.S.-listed shares of Baidu, JD.com, and DD Global, all finishing up around 40% higher.